Hey guys, Boris last from BK Forex. Welcome to our Forex Daily Tech Notes for 9/24/13. Tech levels in play. As always, trading foreign exchange on margin carries a high level risk, may not be suitable for all investors. I ask you to read this disclaimer very carefully to understand all the risks associated with trading on margin and seek advice from an independent financial advisor if you have any doubts. Well, let's take a look at the charts here. Let's take a look. Actually, I want to look at the euro first. Euro is clearly stalling. As a matter of fact, I think all the anti-dollars are really starting to stall at the post-Fed non-taper rally. But with the euro, the stall level is obviously the 36, just in front of it, 35.50s. And now we came back testing 35 support. The really big test here is the 34.50. I think we start breaking that level, we come right back into the pre-breakout zone. And then, of course, 34.50 opens up a potential test all the way out to 33.50, which was the breakout area that initially occurred in the euro dollar. So that's worth watching. To the top side, the really key level, of course, is 36. If we take that out, that takes us all the way towards a run of 37.50, which is the yearly highs going back to the start of the year. So for now, at a moment, I think in many ways at a critical balance here to the upside and to the downside. Pound dollar, not a severe correction, but still definitely a correction. 60 holds for now. A give of 60 takes us down to 59, which is a more serious support, and then a really strong support around 58. For now, though, the 61 clearly topped out. Break above 61.50 takes us possibly to 63 on cable, but this cable is just kind of notorious for taking levels, then chewing, then taking levels, and doing a basically bull flag formation. So you see a flag here, clearly a little bit of a flag here. For now, though, it looks like the path of least resistance is to the downside with 59, next test level for cable. Aussie, similar type of a story. Obviously, 95 got pushed back. What is interesting, though, about Aussie is the fact that we are holding above 94. We raced all the way out to 95.50 and kind of stalled out at this level. The really big breakout here is if we can clear this level over here, if we can clear above 95s, this opens up even a stronger potential run all the way out to the highs over here, which is like I believe around 96.50 or so. And that would be a very, very powerful recovery in the Aussie, really still working that strong W bottom formation, which is definitely benefiting from. The downside here at below 94s is really comes in around 93. If we trail and drift all the way down to 93s, that opens up the possibility of basically a spike high here and a potential drift all the way out to 92. 90 still the absolute, I think, long-term support. 92 is really the big support on the initial move to the downside for anybody who's bargain hunting. To the top side, it's 95.50 that really breaks things open and makes an interesting run to the fresh highs here around 96.50. Now, dollar yen, on the other hand, starting to flounder again. Dollar yen for a while looked like it was just going to hold and perhaps rebuild and make another run towards the 100, possibly even the 101.50s as it continues to sort of form higher lows. On the other hand, it's also forming lower highs. So you're basically coming into this triangle formation right over here, symmetrical triangle, not even symmetrical triangle, just sort of a triangle formation. Generally, when you have a situation where you have higher lows and lower highs, it comes to a point of compressed volatility, and then the resolution of that volatility, one way or the other way, pretty much creates the directional move in dollar yen. So directional move still not quite clear, but we certainly know that as volatility is compressing, we're getting close to that point, and I think it's definitely worth watching. For now, the key level 98.50 support, 98 big support. To the downside, top side still being capped at 99, 99.50, and really 100 is the really big resistance level to dollar yen. We'll see what occurs here, but so far this compression of volatility could be very, very telling. The other calm dollars kind of look interesting also. To me, dollar CAD spiked out, made a spike low 102, but also is being capped here at 103. So it's not exactly like it's sort of rebuilding itself to move back up. Dollar CAD has had a very, very, very strong move off the 106s all the way down to 102s, and the retrace probably looks like to be petering out at 103.50. At this level, if you are a range trader, it's probably an interesting short with a modest amount of risk around to 104 to see if we can come back, maybe perhaps do a double bottom test here at 102s. And Kiwi still continues to perform relatively well. Where's my Kiwi? Here's the Kiwi. But similar kind of a story. Post taper, spike out. That seems to be the dominant theme across Euro, Pound, Aussie, Kiwi, really visible in the Kiwi, the Pound, and the Euro on a day-to-day basis. And it certainly presents, I think, an interesting risk-reward basis. If you sort of think this is all oversold, dollar gets a little bit of a bid, then all of these shorts against this particular well-defined risks are very small. But on the other hand, it could just be consolidation, and we could have one last burst up to the upside. A lot of stuff will resolve itself. This week is a very quiet week as far as data goes, but there's certainly a lot of government policy that could begin to impact trade and currency markets. So all worth watching. Levels are certainly very key. Some interesting high spec trades if you like to trade against the trend. Assuming these are all top outs post Fed, that certainly the risks are relatively small for a turn trade here at these levels across Kiwi, Euro, and Pound. Wish you guys the best of luck and the best of trading. This is Boris Schlossberg over and out.